Hassane, when we're digging into some of the overall focus of your business, just where are you seeing particularly some of the optimism coming from the investor? Why are you managing to think that despite EVs, for example, being an area we're worried about, stagnation, you're still able to outperform in that area?
Yeah, good morning. Thanks again for having me. So yeah, we reported a quarter. I think the reaction you see in the stock, I think it's all based on where the expectation has been and really what a lot of our peers have already reported. What differentiates on semi for the last, I would say, 4 to 6 quarters, we have been taking action to match and become more in line with what we see from an end demand, both in industrial and automotive. If you recall, in the third quarter earnings, I started talking about automotive softness, inventory digestion. That extended. Therefore, it was not a surprise to what we announced today. It was more of an expectation and really better than expected. But nevertheless, it was a softness that we as a company have been very disciplined in addressing to get us to weather through it much better than a lot of our peers.
Hassane, one criticism from Truist Securities this morning was that there wasn't anything said about the outlook, what happens next in those end markets. So you just said, we rebalance to make sure our output match demand on industrial and automotive. But going forward, what are you hearing from those end market leaders and CEOs about what they think demand for their industry will be in 24?
I think for us, the way we're managing 2024, we're not managing for a recovery, which if you take where we are today as a base, 2024 is going to be basically down in all end markets versus 2023, which was a good year in a lot of the markets. So industrial, automotive, and then the other end markets will remain soft. If the demand picks up in the second half, that's great. That's all tailwinds for us from fab utilization that impacts margin, profitability, and revenue. We'd rather be in this spot rather than prepare for a recovery that doesn't happen. Now you have a correction mid-year. We're taking, again, a much more disciplined approach, which worked very well for us in Q4 coming into Q1.
We used the case study of silicon carbide in the EV context. And Caroline quite rightly points out that we think there will be growth in 2024. It will just be slower growth, that growth is decelerating in global EV demand. Does your business reflect that?
Yeah, I spoke about it earlier today, where the industry still projects a high number for EV growth in the 30 to 40. What I believe, based on customer engagement and really based on some of the leading OEMs in the automotive industry, what they projected for their EV growth in 2024, we look at it more in the 20 to 30 growth. So for me, I more trust what we see, and that's what we're managing to. Still very heavy growth, because what we also projected in light of that market growth is we will grow our silicon carbide 2x the market. So at this point in time, in 2024, we're pegged to end demand. Products are out, qualifications are there. We're designed in all the platforms that we need to be designed into. And right now, it is an end demand signal. We will still take share. We will still grow ahead of market at 2x. The question is, what will the market do through 2024?
And as you said in your call, electrification remains a content expansion opportunity for you as you 2x. So who are the customers that manage to outperform? Why have you managed to get the customers that are ramping production? Where in the world are they ramping production?
Bottom line, they've always been consistent. You only win when you have the best technology. We've been providing the best technology at a high power packaging. So both device, silicon carbide, and the package we put in it, the best technology out there as far as performance. That's why we've been winning. So we've been broadening our customer exposure to kind of reduce that lumpiness from too many focused customers. We have recognized revenue from over 600 customers in 2023. That will keep extending into 2024 as more of the European OEMs start ramping for us. So again, a very broad base of customer, very diversified regionally, from China to North America, and like I said, in Europe. That gives us a very good base to clearly grow from as we manage through the short-term lumpiness of EV adoption.